Hello. Imagine you got a very good position in one investment banking firm where you are handling institutional clients. You are executing trades for them, you are assisting them, helping them take decisions in investing in India. You know, these could be foreign institutional investors or even domestic institutional investors. Who are institutional investors? Someone with huge money, large set of money from large set of customers, and they are one of the custodians who are managing this money. Well, there could be private investors also put into institutional category. However, most of the time these companies are pension funds, mutual fund companies, and fund management and asset management companies, and you are one person who is going to assist them invest in India, trade in India, execute their trades in India. So you know what kind of order you will receive. You are habituated of buying 10 shares of Tata Consultancy Services, 30 shares of Infosys, 100 shares of maybe some other small company which is having a share price of, let's say, 200 or 300 rupees. What I'm trying to tell you that your order size is 10,000, 20,000, 50,000, or at the max 4-5 lakh rupees into one share. I'm talking about generic retail investors ticket size, right? But here the order size will be not such. Here you may receive an order where one order total volume may go even up to 200 crore, because what they are doing is if they are coming to India, or any institutional investors within India, they also have a similar problem. One of the common problem is you cannot track 100 stocks. They also cannot track 100 stocks. So if they have to be limited into 30-40 stocks or even 20-25 stocks, they will be very cautiously picking those companies where the market capitalization is high and they can get decent returns. So if the market capitalization is high, then only they can invest their money. You people, or we all have this understanding that stock market is a place of only big players. Today I'm telling you in this class that this could be one of the assumption and misconception. It is for everyone, and every set of investor have their own set of problems. One of the problem right now you have is you serving one of the big player got an order to execute 500 crore worth of order, where you might have to buy even 10 lakh shares of one company. Now what is the problem you have here? So the problem here is you also know that share price is, let's say, going as 50 rupees, but the moment you place an order to buy, let's say, 5 crore shares, what will happen? This is a 250 crore order for 50 rupees per share, 5 crore order. The idea is you have this large order to execute, and you know that there are only few lakhs of buyers who are present on the balance sheet, isn't it? Yes, this is how you are habituated to see the order book when you are looking at the order book of these companies where you are investing as a retail investor. So what are the problem you will face? Problem number one, the impact cost, which you have already learned, right? You know that if you are going to buy this much big amount of share, you have to give a lot of impact cost. Second, you know that the moment this news will go out that someone like your client is buying in such a huge number, it will create a euphoria among the investors, and everybody may go and want to buy, because they will think, okay, smart money is buying it, there must be some good reason, some insider reason, something is going to happen really good with this company, so I must buy also. So the share which is trading at just 50 rupees may go to 55 rupees. And this institutional investors, he is coming to India just to get a return of 10-12%. And the stock price has shot by 12% or 15% already just because of the news. So you have many different problems when you go and execute larger orders. Yes, every person have their own problem. One small investor have their own problem, one large investor is having their own problem. Idea is to know that what are the problems you have in your hand and what are the opportunities you have in your hand as well. As a retail investor, you can go and invest even into a 500 crore company if you really know that the top management is good, product is good. You can go and buy small amount, and this 500 crore company can become one day 5 lakh crore company. However, one institutional trader always have this challenge. They have huge pool of money. They cannot track thousands of stocks also, and they have to go with limited companies, and they get restricted among top 50-60 companies. And even when they are restricted within those 50-60 companies, they have a different set of challenge, and the challenge is the execution. Why I'm telling you this? Because I'm going to cover one topic, algo trading, into this class. This is an extension class for class 8 of module 1, because on different Facebook groups and Telegram groups, our close community group of learners of complete course on Indian stock market, they have been asking me to make this class, the class on where I should be explaining them what is algo trading. Yes, you are in class of algo trading, and this video I'm going to cover different aspect of algo trading one by one, and what is the takeaway for you all is also something which will be covered along with this. So bear with me for 15-20 minutes more if you really want to understand algo trading. So as I told you why I am making this class. So I'm making this class to resolve the curiosity of my own learners. They may not have to do anything with algo trading, but then they have curiosity, and this curiosity must be resolved, and that is why I'm making this class. And then I must admit here that algo trading is not going to be the part of this course. Already I have included 90 videos across all the topics, but algo trading is not possible to include into this course. You have to trust me there. In future, I'm not sure, but at least the syllabus which I have given you, within that there are already 150 videos into this class. I don't think I'm gonna include algo trading at this juncture. So this video is just giving you a glimpse of algo trading, resolving certain of curiosity, and me sharing some information from that field to you. The second purpose behind making this video is also to guide the young generation of traders. In the previous class, I'm in the class 8.1, where I explained you the difference between trading and investing. I told you one story of one daily broker who used technology way back in 1980s to become an arbitrage trader. And what was that technology? That technology was telephone. Yes, if you take 70s and 80s, telephone was itself a technology. These days you have handy mobile numbers and mobile in your hand, and some people have 2-3 mobiles also with them, and we have adapted it so much that it don't look like even a technology, right? However, this technology was used to do arbitrage between two exchange. I told you about that story in class 8. I'll quickly repeat it. So there was a person, okay, consider it a hypothetical person. He would have 2 telephone lines way back in 1980. He would call to Jaipur Exchange and Bombay Exchange both, and the moment he will find the price difference, he will execute the trade. He will buy at one place and sell at another place. Where price is higher, he will sell. Where price is higher, he will buy. Price is lower, he will buy, and the difference will be his profit, and no position at the end of the day. Yes, finding opportunity is trading, and this is what I explained you, that trading is done in a short span of time. This person way back in 80 was using telephone lines, and his time frequency was 1 day, which is still very faster comparing 1980s. It is an expensive technology in 80s, because even Mr. Narayan Murthy, when he started Infosys, he couldn't have telephone lines for 3 years. And when he didn't have telephone lines for 3 years, you can understand that how rare it was to own that technology. But then a successful trader has to have technology in favor of him. And in this video, I'm gonna explain you that as well, that how Algo trading is all about technology, right? So the purpose, I told you that why I'm making this video. Hope you are getting connected with me. Now, in algo trading, you have two parts. One is trading, another is algo, and let's understand the psychology of trading this time. So in previous video also, I talked about the trading psychology, but it was more on the side of comparing investing and trading. However, here in this video, we will just focus on the trading part. So it becomes very important for us to understand that what is trading psychology. So see, the common truth about all the traders are they work on two psychology or two behavior, you can say. One is called fear, another is called greed. Let's talk about the greed first. So greed is nothing but the outcome or a sense where what we feel is something which I have is not enough for me and I should own more. Obviously, being optimistic, being demanding, or being ambitious is not wrong. But then every ambition has to be supported by hard work. And even after a hard work, there will be a rate at which you will grow. You will not grow very, very rich overnight. But then the moment you see lot of liquidity into stock market, and when you see lot of ups and downs of shares, you feel like if in the 10 minutes, 15 minutes, 1 hour rate of interval, you can multiply your money, you can actually become super rich in even 30 days or 50 days. You start calculating and multiplying, and this goes into your head. It changes your psychology, you know, and that's why I keep telling that trading is all about controlling these two emotions, fear and greed. Greed I explained you. So nevertheless, how much money you have or how much asset you possess or how much respect you have, you still seek more, and sometime you want to grab more than what it should be naturally correct. You know, I'm no saint. I do have greed. Everybody is having greed, and then we have to control it, and we have to back the outcome with our hard work and being very realistic. Talking about these things are very simple. However, practicing them is very difficult. But if you use technology, these kind of things can be controlled. What can be controlled? Even the greed, by becoming realistic and giving a set of instruction to the computer and not thinking only within our own head. Anyway, moving further to the greed part, from greed to fear, what are the different kind of fear? So one of the fear which we always have is, am I doing right or I'm doing wrong? The strategy or the investment decision, which, okay, I'll not talk about investment in this class. The trading strategies which I have thought over, is it something which is wrong or is it something which is right? So fear of being wrong is always there, and it should be there. It will be there. How to overcome it? Again, by only accepting it. Everybody can go wrong. There could be a new scenario which can come and it can prove your previous strategy wrong. However, if you have developed skill set, you will recover back. You may lose, you may win, and you will recover back. That's how a trader works. Another thing, in order to generate a lot of wealth, can I lose all which I have already? Yes, you can lose, because trading is also a kind of business where you put your opportunity cost, your skill, and also your money at stake. So yes, this fear is always there, and traders have to control this. Then lot of people have this unique fear, and that fear is called fear of missing out. One of the reason why I'm making this class, because I want to clean up this fear from my course learners. So everyone who think that if they don't understand algo trading or technical analysis or advanced trading techniques, they are missing something, then let me assure you something. You are not missing anything. Only having a good knowledge about fundamental analysis, risk management and portfolio management can also make you a wealth creator within longer duration. Most of the people whom you have heard as a celebrity investors or celebrities from this field of stock market, they have been all investors. How many traders' name you have heard? Very few. I'm not saying that great traders are not there. They are certainly there, and they have created wealth through trading also. But my point here is that they have their own style, they have their own skill set, and some of you might not have that skill set. But this doesn't mean that you are missing out. As I told you, big people have their own problem, small people will have their own problem, and everybody is having their own strength, and you always have to play on your strength. So one of the reason why I'm making this video is also that if some people have this feeling that they are missing out something because they don't know technology, they don't know programming language, they don't understand technical analysis, or they don't have enough time to understand technical analysis, please remove this fear from your head. There are three different fields. Fundamental study valuation is a different field altogether, relative valuation. Technical analysis is a different field, and the extension of technical analysis is algorithmic trading. So technical analysis is again a tool and different methods of identifying the trend. However, when we talk about algo trading, it is much advanced than just doing technical analysis. Some part of the technical analysis will be used into algo trading as well, but it is not necessary that even a good technical analysis guy can become an algo trader. So no need to worry, no need to fear having this unique fear of missing out. Okay, now let's move. So you understand the trading psychology now. Now the point here is there are challenges of trading, and technology needs to solve these challenges. And when technology starts solving these problems, this field of study become algo trading. Okay, so what is algorithm? Let's understand that first. So algorithm is nothing but a set of sequences or a set of instruction, finite set of instruction. So you have imagined or you have identified certain trends or certain opportunities, and you know that this is how you can grab that opportunity, or this is how you can solve this challenge. So you write that steps. Now this steps should be finite steps. They cannot be infinite steps. So they are finite steps, computer implemented instruction. So the instruction you are giving, but then you are formulating it in any of the language which a computer will understand. So that will be a computer programming languages, and it will be, this whole methodology will be used to either solve any problem or to do a lot of computation, because manual computation will be not that easy to do, complex computation. So again I'll repeat what is algorithm. So algorithm is set of instruction, finite set of instruction given through a programming languages to computer which can solve one of the problem and do a complex computation. This is what is called the algorithm part. Hope this is not complex. Now what is algo trading? So you understand trading psychology, and you understand that algorithm, computers, programming languages can solve certain of the problem. So one of the problem which we took, let's say just talk about how manually we could have solved that problem. Which problem? The problem which I told you in the very beginning, that you have to execute a very large order. That order is where you have to buy crore of share, and you know that the moment you will enter 1 crore share buy, the news will come out. You have to give lot of impact cost, stock prices may shot up. So okay, what I can do, okay, I will not put all the order at a time. What I'll do that every minute I will enter, let's say 10,000 shares. I'll see how many, what is the common average order size is, whether it's 5,000 unit or 10,000 unit. I'll do some calculation by looking at the order book, historical order book, and trend within that share. And what I'll do that, okay, every 5 minutes I'll enter a new order, and that's how in next 3 days I'll execute the whole strategy. Manually I can do that? Yes, but it will take a lot of time, and I may go wrong also. Okay, what could be the another way we can do it? Well, another way could be, we can decide, okay, so my order should not impact the market. So I have to stay within the generic volume of it. So let's say there is a volume where the 5 lakh orders get executed every half an hour in the share, which I have to buy. So what I'll do that, I'll enter only 50,000, 10% of the total volume executed into that specific hour. So I can decide this, and I can ask 2 or 3 dealers or people who punch order and ask them that, okay, every half an hour, this much share you go and keep on buying. Well, yes, this can be done. Nothing but a set of instruction, but this instruction is done on a lot of gut feeling that what is the volume. We are not constantly calculating the volume. However, what we need to do is we have to constantly continue. Let's say we want to take a route of going with the volume, and we have to go with 10% of the volume. Now, do you think it is manually possible to go and calculate the volume and also the 10% and then immediately punch the order? No. So what we can do? We can give this instruction to computer through a programming language, and then the problem will be solved. Now, when I'm telling you these two examples of time and volume and calculated number of orders to be executed, keeping these two strategy, I'm doing nothing but explaining you two algos. One is called trade weighted average price, time weighted average price, TWAP, and another is called VWAP, volume weighted average price. Yes, two of the very famous execution strategies. You must be wondering that I'm explaining you algo trading, and I'm all explaining you is about how to safeguard your order, how to use it against the risk of price getting short, risk of manually placing the orders. I'm nowhere talking about how to make money using algo trading. Yes, a lot of people have this misconception that algo trading is only used for making and minting money from the market. Well, to understand this, you have to first understand the investment banking at a smart money structure. So there are two type of banks or two type of entities who are having this smart money, and they get categorically divided into two part vertical. One is called buy side of the bank, another is called sell side of the bank. So buy side of the bank manage the assets. So a mutual fund company, a pension fund, LIC, they are buy side of the fund. They have money, they have to buy and make sure that they are getting enough return. Their problem is different. Their problem is these kind of executions where they may lose money, lot of money, where they may not be able to get stocks in the right prices. However, there is sell side of it where there are aggressive traders and who keep on identifying opportunities. Now, sometime these opportunities will be there only in few asset classes, or asset classes when I am saying, they may find it in gold, they may find it in currency, they may find it in stocks, they may find it in the stocks trading at Singapore exchange, they may find this opportunity on ETFs trading in US, they may find this opportunity in cross country asset being traded, global assets being traded. So the idea here is, yes, identifying the gap and using that gap using technology is also being done using algo trading by people who are on the sell side of the investment bank. So now you have to understand it from two perspectives. So young generation of traders, people coming from engineering background and all, for them, if you really want to understand and get into this field, you can choose both of the way. One is you can really become very good at one of these three things. What are those three? One, see, all this computation needs to be done mathematically correct. Computation means mathematics. So you should be very good at mathematics, different field of mathematics, be it probability, statistics, and so many other fields of mathematics, and even sometimes physics, which being used within the trading arena. Second, programming language. Programming language where you can actually write very good programs, fast programs, because when you will get into algo trading part, there will be other people also with whom you have to compete. You have to front run against them. Both of you may think alike that, okay, this is the gap here and you have to eat that gap. and you are here coming from one of the top engineering college, and then there is another guy who is coming from your batch itself. He may be also working in another trading firm, and he want to front run against you. He want to eat that opportunity first. So not only that, the basic programming languages which you should know, you should also know how to write those programs which can send order to exchange faster than others. So you have to be very fast using both hardware and software. So programming languages you have to work these days to send orders very fast, exchange offers, co-location facility. Even in NSE, if you go, they will place your server beside the trade execution servers in the exchange server itself. They call it co-location facility. They charge you certain fee, and on the payment of that fee you can basically take the co-location facility and execute large orders, right? So you need to know mathematics, you need to know programming language, you need to understand the hardware and infrastructure part of it, and then you need to know the market microstructure. So this market is built up of many products. So many products are interdependent on each other. You need to learn finance, investing, different products, different market, and relation of one market with another market. Right? You can be good at all these three, or you can good at just one of it and become one of the specialists in one of these investment bank. You need not have to start jumping and applying your money using these technology with half-cooked knowledge. The best of the money which you can earn, probably if you really being very enthusiastic to make this career, is go and get placed into these firms. They will pay you probably 5 crore of salary in a year also, or for a starter it may be $500,000 salary. But a good trader, a specialist person, can get as paid high as possible, which you may not be able to trade and execute on the very early period if you are trying to do all these things together. So this is just one career suggestion to a lot of people who want to make, who are very excited about this area and keep asking me whether I should make a career into the investment bank, what are the roles which I can get within the stock market. So on sell side, these kind of roles you can grab. On the buy side, you can grab roles where you understand how to minimize, mitigate the risk of the large clients, the risk related with their execution, right? So it's a very vast field you have to explore further, but very importantly what you need to do is you have to learn these 3 P's, all 3 of them, or become really good at one of them: mathematics, computer programming languages, and the market microstructure, which is nothing based on the financial products, right? So hope by now you understood that what exactly is algorithmic trading, what are the different fields, what is the use with, and where are these getting used. So I will repeat it: buy side use it for their risk management purpose to make sure their cost of execution comes down. Sell side of the people try to find gap among different products in different geography, try to become fast and identify those behaviors and trends where they know that all the orders which they are going to execute will fetch them some profit. There is an extension of algo trading called also high frequency trading, where they work on executing fast orders and multiple orders within a very small span of time. Some other time maybe I'll make a video on high frequency trading. Not only that, the technology keep on evolving. I'm sure you all have heard about artificial intelligence and machine learning, and these fields are also getting used within algo trading now. So what we were talking about is still manual, or I can say that natural intelligentsia. Natural intelligentsia, where you understand the market phenomena, where you know that if you place big large order, prices may go short, where you have developed enough mathematical models which will keep calculating the averages and the time and the weighted price and so many other things. And again, natural intelligentsia to write programs. However, there are people who can write such programs which will work as artificial intelligence and where the model themselves will evolve and learn a lot of things from the market by all the data which they will receive, right? So even this field is having quite a deeper and a very broad perspective of it. My suggestion to all those people who were looking for a video from me on the algo trading is that, you know, you have to become a specialist. You really have to devote time and learn those 3 subjects which I have told you very categorically. And then for other people who are investors who don't want to get into this, let me see, I come from a place called, I always try to collate some story. So I come from a place, Bodh Gaya and Gaya. One is a very famous place for Buddhist and another place is from Hindus, you know. So bringing this philosophy thing is quite common with me. I always try to bring that philosophy with you. See, at the end of the day, algo trading is all about trading, and trading is all about fear and greed. Difficult to control. Not only in trading, in any part of your life, you are able to control these 2 things. You will become rich, you will become successful, you will earn a lot of respect in the society. Doesn't matter which field you belong from. So just because you think that you will be only successful because these machines, this algorithm will manage this fear and greed for you, because see, if you write programs, your risk management framework is defined. For example, you may think that I will place a stop loss order, but then you keep on removing that stop loss orders when you manually trade. But when your algo will trade, it will not take in account your emotions. It will not, you will place your fear and greed aside, and that's how these models will trade. But then, as I told you, just because you want to control the fear and greed through technology, you do not have to start jumping into it. Controlling these 2 emotions will make you successful in your own field also. So don't keep that fear of missing out thing in your head just because you think that algo trading is such a wonderful thing and you will always get beaten by it. No, it will not happen. They have their own challenges, the own set of investment which is required there. The way 2 telephone lines was a huge investment in 1980s, having an infrastructure to do algo trading is a risky affair as well, right? So now at the end of the day, end of the class, I must tell you the intent behind making this course. I have no intent to sell you any algo trading course. It's just that you people asked what exactly is algo trading, so I'm making this as a part 2 of class 8. I'm going to include this video there. Now I'm also making it so that you don't have this fear of missing out thing. I'm again and again repeating it. You can still focus on becoming a value investor, still focus on playing on your forte, your own strength. Hope I was able to tell you what is algo trading, was able to give you glimpse of algo trading, the intricacies of algo trading, and for people who are enthusiastic about algo trading career or making a career into, you know, the good investment banks on the sell side, for them they would have got some light as where exactly they have to move forward. I cannot make this video lengthier. I have so much to talk on algo trading, but then I may write blog. I'll create a separate section for this where I'm also quite always excited about technology. However, now my journey, my goal has changed. I want to use technology to help a lot of retail people who get duped by not having the good knowledge or the right knowledge, I would say, who have been misguided from ages. That is the battle which I have picked up for myself. You know, however, the being and coming from graduating from an engineering college and working with large sell-side investment banks, I have seen exceptionally good work by some people in this domain. I have done myself also few of the things, or I would say quite a good things which I have implemented within my own area, and then I'm also excited about talking on this and learning more and more things about this. However, since the battle is different, the fight is different, I would still focus on completing or making this the complete course on Indian stock market from retail perspective, one of the best course which can touch a million life. And with that note, I would like to close this video on algo trading. If I was not able to clearly explain or you think something is missing, or you think the confusion about algo trading is still there, please comment. I will probably also put this on YouTube. So you can comment, you can tell me that where I missed, where I was not able to explain you. I'll try to record another video. Thank you very much.